The friends and family. So some of the pros of friends and family capital for your real estate business is there tends to be little to no red tape, right? So again, these are folks that you have pre-existing relationships with. They already know you. They probably have somewhat of a trusting relationship with you. And it's relatively, I would say, easy, right, to raise capital from them in terms of particularly around the paperwork that you may have to fill out and some other things like that. You're primarily leveraging that relationship that you have with them. You position the deal to them, and generally you can move things through pretty quickly. The other nice thing about friends and family is you can negotiate the deal that you think is best for you and hopefully for your investor as well. And depending on where you're at in your real estate career, oftentimes can structure pretty favorable terms for yourself and as well as for your investors. The other big advantage of friends and family money is particularly if you're just getting started, that relationship that you have with these folks can often offset perhaps your lack of experience. A lot of people that are getting started for the first time in real estate investing use this friends and family money because, again, that pre-existing relationship. The other side of this, the cons are, unless you have friends and family that have really deep pockets, this capital can often have some limitations around how fast you can scale your business on this capital, right? So again, unless you have some really deep pocketed friends and family, you're eventually probably going to tap out, particularly if you're looking to do 5, 10, 15, 20 deals a month or a year. And it's only going to get you so far. Just something to be aware of is when you're mixing business and particularly capital and money with friends and family, it can create strain on relationships, right? So certainly if the project doesn't go well and you've taken capital from your friends and family, that's going to create a certain amount of stress and strain on the relationship. We've also seen deals go exceedingly well and it create strain on that relationship, right? For example, if you borrow money from, let's say, a family member or a friend, and you knock it out of the park and make a ton of money, some people will look at that and say, man, I provided the capital when I got my fixed rate of 8% or 9% or 10%, but they may feel like they're owed more. We'll talk a little bit more about how to manage that, but just realize that if you're going to take friends and family money, it opens the door. It's not necessarily a foregone conclusion, but it could create some strain on the relationship, and you should be prepared for that. The other thing we've seen as perhaps a con with the friends and family money is sometimes these folks like to be more involved in the business and the decisions that are being made around that real estate investment than maybe you'd want them to be, right? So some will have opinions on paint color or how the kitchen should be finished or how the bathroom should be done. And maybe that's something you're looking for, right? Is another set of eyes and another mentor, if you will, to help you think through some of these things, but maybe not, right? So again, make sure those expectations are clearly set and understand that is something that could come along with that friends and family capital. The other thing with this, obviously, from a cons perspective is you're going to have to manage the relationship, right? They're going to be curious how the project's going. You're going to have to provide updates. You're likely going to have to make payments at some point, right? So make sure that you understand what the requirements are going to be and expectations of that investor in terms of how in the loop they're going to be kept on how the project's progressing. And the last con here that I would say from a friends and family perspective, and this is going to be super dependent upon, obviously, some of these folks may not have the experience or the expertise of real estate investing, and they may not totally understand what they're signing up for. So if a project goes long, and you need additional time to finish it or to sell it, and this person's expecting their money back at 6, 7, 8, 9, 10 months, whatever you've told them, they may not totally understand that real estate investments are fluid. Oftentimes need some more time or different things happen. So you may end up having to educate this capital as your business is growing, which again is going to be a resource and a time thing that you're going to just have to budget for. So friends and family capital, it's where a lot of people get started. It's a great source of capital. There's some real great pros. There's also some cons that again you should just be aware of if that's the way you're going to plan on capitalizing your business.